Today, I wanted to go over with you guys why I think real estate is the better investment than any other vehicles that are out there currently right now. Like right now, the world's going crazy. Trump just won the election again, getting after it. I'm actually super happy about that. But this has actually spiked in the economic world. The capital world, capital market all around the world is reacting to this. But there's one thing that still matters to me is my investors' money, the business, the company that I run, your money, my money, all of it has to have a place to go. And it doesn't matter what the rest of the world is doing. You have to be 100% committed to the vehicle that where you want to put your money. I say it all the time. Where do you want your family's money? That's important. So, why I think real estate's a better investment than all these other ones. So, let's just take a look at that. So, cash. Why is it better than cash? Because with cash, you got inflation. That's not going anywhere. That is going to continue to happen. The difference of it is when you move your money with that paper, if you trade paper for paper, it's any person's guess what's going to happen. But if you continue to do what you're doing is you take your cash paper and you move it into a real asset, it doesn't go like real assets go up in inflationary periods. It's an inflation hedge. So real estate is an inflation hedge based on that. Your cash will continue to go down. So just because you have $100 bill now, that $100 bill only buys $80 worth of products, services, and goods nowadays. As a matter of fact, in 2020, from 2020 to now, the dollar has lost 20% of its buying power. That's crazy, and that'll continue to happen no matter what. So inflation will go up no matter what the Fed says, where they try to tame it to below 2% or 2%. On the average, it's been 3%. So can you keep up with that? That's why leaving your money in cash isn't the best investment. Next, your IRAs and retirement accounts, IRAs, 401ks, whatever that is. This right here is set up to trap you, period. You put your money in your retirement account, your IRA, 401k, and then later you take it out and you end up paying taxes on it. Now, if you watch what's happening in the world, the debt, with the way the debt is right now, like the debt for our country, they have to get that money back, and it is going to be through taxes, period. Whether they print more money and give it out to people, it's going to raise the taxes. They're already going to be fighting to raise the taxes at some point. They have to do that. So why would you put your money into a retirement account, sock it away today, later to take it out to pay higher taxes? It's going to be higher later anyways. Or it's going to go to you as earned income, and you're going to be taxed at a higher rate at that specific time. And I think it's called, yeah. You have to take out 4% as you hit a certain age. I think it's 72. Once you hit 72, you have to take out 4% a year. It's required. It will happen. If you live 25 years after that, which you might, you'll be down to zero, right? Just from the max, you have to take this money out. So this was all set up by Congress, Wall Street, other big people who were taking, like all of them came up with this plan to say, yeah, let's trap this money and let's use it, and then they'll pay taxes on it later. So this is not going to help you. Boom. That's also not going to help you. Leaving your money in cash is not going to help you. And stocks is really controlled by Wall Street. That's controlled by Wall Street. And because of it, you have no control over it. It's not going to pay you cash flow. It's controlled and it can be manipulated by Wall Street. And really the best stocks are the ones that you should have owned before they hit the stock market at all, right? Most people don't make money on the stock market. They make money before it goes public, and that's where the money really is. And unless you are going to start the new Apple or start the new Nvidia, or like you aren't going to really get the major benefits of the stocks as it relates to the investment they're concerned. Next, gold and silver. I still don't like gold and silver. People, I don't know. No one's ever come to me and said, "Hey, I want to buy a shirt. I got gold." Like, it just doesn't do anything, and it doesn't provide you cash flow or anything like that. Crypto and Bitcoin right now, I want to say today it was like at 80. It's like 80 grand, right? That's crazy. Here's the difference. You have no control over that. That's great. I can tell you over and over again that my real estate investments will beat crypto or Bitcoin or whatever, Bitcoin, because I can refinance my money out, keep the asset, and it keeps cash flowing and paying me, and I don't have to pay taxes on that. You can't do that. Once you cash out of crypto, you're done. That's it. With your own business, this is the one that people get. I could just put money back in my own businesses. But the real side is, why do you want two businesses? If you're going to run your own business, you're better off taking the money you have and investing it into something that's going to pay you cash flow, which I'll go over from a real estate perspective, pay you every month rather than have two businesses. You don't need two businesses, right? 86% of business owners fail in business. So if you're already succeeding, why would you take your money and dump it back into the business when you can actually take the money you have and invest it in real estate that pays you something that's already working? Now you have two incomes coming in rather than bet it all on your business, because who knows, it may not work forever. As you can tell with this election, some people, they're going to be winners and they're going to be losers in this. You just need to decide who you want to be later down the line. So real estate, as it checks all these boxes, and I'm talking about multifamily real estate, big commercial institutional quality assets. Now, what do? Number one, capital preservation. They preserve your money. They preserve capital, right? So if you take your money, you trade it from cash, and you invest it in a deal, these big apartment buildings, into a real asset, there's value there. It protects that capital, so now it's not being lost. And pin's not working. And you're getting cash flow. These things have to cash flow or they're not going to be valuable. Like all the stuff we're looking at, they have to cash flow from day one. Next, you have future, man, it's appreciation. I'll stop that right there. That says appreciation, long-term future appreciation. You're thinking about investing money because in the future, you want long-term growth on your investments, all right? Next, you want scale. Hey, man, you want to be able to scale your assets. Scale also is diversification. I just put diverse. You can diversify. Look, one address or one big property that has 200 units is diversification. 200 tenants all paying is diversified. If one person stops, you won't even know. Two people stop, you won't even know. 20 people stop, you won't even know. That's diversification. So everybody who talks about, well, you need multiple streams of income. Yeah, it's nice if your multiple streams of income comes off of one activity. That's where you want for the scale. Now the scale, you can buy one property or invest in one property and it can have 100 units, 200 units. That's the difference of that scale as it relates to that being better for me, right? It's not a mutual fund where you got a bunch of different things in there and you don't know what it is. You know what this is. Next, you have good leverage, or you have debt or good debt leverage. Every $1 buys you $3, right? So if you invest your money and you have good leverage and good debt on that property, your $1 million buys you a $3 million assets or controls a $3 million asset, or your $10 million controls a $30 million asset, or your $100 million. You get the point. You just keep on going with that because you have the debt side of it. And that debt also provides, when there's debt and the asset has it anyways, is you get tax write-offs. You get the tax write-offs from being in an investment like this. Now, why am I sharing all this stuff with you guys? Because once you know what you're looking for, you stop looking at all the other stuff. You stop going after the stocks. You stop going after the IRAs. You stop putting money there. You stop going after the gold and silver and the Bitcoin, and you stop getting excited about it going up and where it's at. Like, you know where you're headed. Like for me, I only look at the real estate stuff. I'm building, I mean, I've been doing real estate on my own with a few partners, and now I built a business around being able to help more people get invested in the real estate because the real estate that is the number one vehicle for me. And hopefully it's the number one vehicle for you guys. So as you're thinking through like all this stuff, you don't know what's going to happen. The election, Trump's the new president, 4 years going to go by, there'll be another president. God knows who that'll be. We're probably going to have a great next 4 years. And be honest with you, it's going to be something that gets started, but you want to be able to take advantage of. I personally believe that under what's going to be happening soon, real estate is going to get a big lift. Here's my prediction. I love predictions. I think they're going to bring the accelerated depreciation. That right now it's going to be coming up. It's going to be lowering again. I think they're going to pop that up to at least 80%. They're going to bring back accelerated depreciation. I think that's going to happen. Let's see. We're going to date timestamp this video, guys. So we're going to watch this, we're going to go back to this is my predictions. They're going to bring that back. It might even be 100%. I don't know. I think they're going to drop the tax thing down from 19 to maybe about 15%. I think that'll happen from 19 to 15. Let's see what else. trying to think of another good tax thing that they might do for real estate. I don't know about that. I think these are going to be the main ones. I think these would be the main ones. I think if this doesn't happen, I'll give everybody a free book that watches this and then gives me a call about it after the year 4. I think this will be something they're going to work on pretty quickly. I don't think. Here's what I do. Here's what I know. All presidents, they're going to print money. They're going to print. They're going to give away something, right? Because they're going to get the economy going and spending and stuff like that. Right now, people are spending. Money's starting to move around, but they got to also give somebody incentives. The rates are going to lower. The rates are going to come down. They're going to print money. That's going to cause inflation to go up again. Rents are going to go up. Rents are going to go up. I think rents are going to get more by 2027. Rents are going to be up. They're going to flatten out 2026, but rents are going to go up. But they're going to print money. I don't know if it's going to happen in this presidency. It might be right after. Interest rates are going to continue to come down. They're already coming down. Interest rates are already coming down, but they're going to continue to come down. I don't think they're going to drop well below the 10-year treasury is going to stay 4, but I think the average interest rate on commercial financing, Fannie, Freddie, all that other stuff is going to range somewhere. It's going to drop back down to 4.25. It's going to become 4.25 coming up here soon, probably within the next 24 months. And because of it, the rent market will continue to escalate because people will start building again. A lot of properties are going to get absorbed. There's going to be a shortage of housing and rents are going to escalate and they're going to skyrocket. As a matter of fact, the average rent will be 10% higher than it is today, and it will be 5% higher than it was at the height of the rent as it relates to when everybody was buying stuff and rents were skyrocketing all over the United States. That was a 25% increase on rents in a relatively short amount of time. It'll be higher than it is today, but it'll be at least 10% of what it was at its highest point. So that's my prediction. Accelerated depreciation, 80 to 100%. The taxes is going to go from like 19 to 15, somewhere in there. It might be a little less. They're eventually somewhere in this, they're either going to give money to people or they're going to continue to cut the tax rate, which is the same as printing money and giving it away. But the interest rates are going to come down, so people are going to start borrowing again. And because of it, it's going to create this new valuation of real assets, which are rents and in properties. And the rents are going to go up and they're going to skyrocket. So if you aren't invested in multifamily real estate now's the time. It really is, because these assets are all controlled by rent. The income dictates how much the values are worth. The interest rate dictates how much you can actually buy the property or how much cash flow that property kicks off. That's going to continue to happen. So if you guys aren't sure where you want to invest your money, let me tell you, I think real estate's a better investment than any other one of these. And I know that the things that I'm talking about may seem like, oh yeah, it sounds good. And it's all like foo-foo. I'm not a foo-foo guy. I'm not a very positive guy. I think the world's going to come to an end all the time. So I'm constantly like, hey, how can I play this game and win? How can I play this game so I can weather any economic storm? Me and my investors can win this game. Better assets, better locations, focus on the rents and be conservative and buy great assets that can never be destroyed by anything else. And don't focus on investing my money or my investors' money or anybody else's money anywhere, right? And here's the reason why I say those things. I just take it off the table. So I hope that helps you. Remember my predictions. Taxes, depreciation coming back, interest rates lowering, and people borrowing more money, rates skyrocketing in 27. That's going to happen. Anyways, like this video, share this video, comment on the video. I really wanted to go over why I think real estate is a better investment than these other vehicles. And these vehicles are actually what your choices are. You're only going to have a couple of choices of places to put your money. And if you know where you want your money and what you want it to do, preserve it, cash flow, appreciation, great leverage, scale. Scale basically is diversification and it de-risks your investments. Real estate, the type of stuff that we're looking at is the best place to do that. So if you have any questions, go to bell-capital.com. You can schedule a call or you can hit invest now to get started. You can see what's open to you. You got to be accredited, got to have a great attitude, got to love real estate, but we are here for you. And I'm here to answer your questions, myself or anybody on my team. So if you schedule a call, we'll jump on a call with you, answer questions you have about your personal situation, and hopefully we can get you going. And if not, we'll get you on the right path. We're here for you for that. So have a great day today. Like this video, share the video, comment, subscribe. Appreciate you. Let's go.